is Market Cap episode 9, and we are hosting Rachel from Foresight Ventures. So yeah, for the people who are here for the first time, or maybe you're back, this Market Cap we discuss market movements, news items, trending narratives, and we get into it with our own team of researchers and other team members, and we like to have on guests who can add their unique perspectives to the show. We do this live on X. It's also live on YouTube if you prefer that, and it will be posted on YouTube on the weekend as well. So um, I'll introduce myself first. I'm Stefano. I'm Director Institutional Services at Alea, and I'm your host and moderator. With me, I have Kirk, who's our Director of Protocol Services, and we got Dee, who's our researcher and show contributor. And then our guest for today is Rachel Chung, Director of Global Branding at Foresight Ventures. Rachel, very nice to have you with us. Yeah, please go ahead and tell us a little bit more about yourself and about Foresight.
Yeah. Hi, everyone. Very nice to be here with all of you. And Alea Research team is such a great team, and we've been talking and discussing some collaborations in the future. Well, also at Foresight Ventures, we are a fund that manage 400 million AUM. And also, we have a portfolio of 150 plus startup companies across the crypto space. We are also one of the most active VC in 2024. So today it's very nice to join the discussion. I am the global branding director, so I could bring a less technical vibe to the
Please. Yeah, please. I'm not a techie either, so please. I enjoy and appreciate that perspective. Um, yeah, you guys are like obviously one of the major VCs in the space, like 150 startups. That's huge. And yeah, we're gonna talk about the market and VC specifically. Usually, you start off the show by having a quick look at what the market is doing. So we'll do it. I think there's a lot of reason for people to rejoice. It's looking very green out there. Um, Guys, how are our bags feeling?
But it was a tough time. I think the longer you spend in crypto, not only does it progressively deteriorate your mental health, but it, you kind of like, you don't, you can never say that you know exactly where the market's going to go, right? To anyone who says that, it's just pie in the sky, really. But you become increasingly used to like these huge drawdowns that happen regularly throughout a cycle, right? And I think a lot of people who maybe joined in the previous cycle have had a lot of bad memories how the cycle ended with the collapse of FTX, the fraud with Celsius, Terra Luna collapse. You saw a ton of bad things happen. So I think a lot of market participants are sort of on the edge of their seats, anticipating, what's going to be the next FTX, what's going to be the thing that sends us to 30K a coin, 20K a coin. But the flip side of that, you know, Bitcoin's, I think it's the fourth biggest asset in the world now. I think it's like gold, Apple, Nvidia, then Bitcoin. A $2 trillion market cap around. And so, whilst people might get upset that each market, you could argue, has diminishing returns, you could also argue the other side of that. If the returns are diminishing, then you could make the case that so too should the drawdowns, right? And so, we ran down to the 74K level in April. And a lot of people, it's over, pack it up, pack your bags, you need to go and get a real job now. But, the flip side of that is, we have the ETFs now. Bitcoin's being seen as a much more institutionalized asset to be brought into people's portfolios as a form of diversification. So I think if you spent a lot of time in these markets, the drawdown we saw between March, well, was it April that we hit the 74K level just before April? For some, that was it's over. For others, it was this is the mid cycle correction. It's quite heavy. That half the participants buy the shit out of it, the other half pack their bags up and leave. And I think ultimately that was kind of what we saw. It's either May 2021 or November 2021, that 74K level. And at the moment, it looks a bit more like May 2021 than November. So that's my 2 cents on it.
Yeah, no, I mean, agree. I wore my green shirt today on purpose, because it's really good to get a little green. Um, no, I mean, the thing I always look at is like, I'm a yield guy, you know what I mean? So like whenever I see the markets move up, I always start looking at, what are the funding rates doing? What are the yields looking like on the lending markets in terms of, utilization, how much are people borrowing? It's definitely interesting to see, as the markets start climbing, the correlation, with the rest of the metrics, right? So it's good, man. It's good. I mean, I'm tired of seeing, Athena post, 4% APY a week. I mean, I want to start seeing them back in the 20 percentile range, and it'll definitely be a big boost, I think, for obviously for the rest of the market as well, outside of just the majors. So it's definitely been good to see. It's been good to see the altcoins kind of get a little bit of love. ETH has decided to wake up a little bit, and it's, although I still think it's cursed personally, I can't do it just because I'm scarred for life. Um, it's good to see it wake up a little bit, right? And really start to move on an upward trajectory, because I personally think, obviously that ETH has an incredible moat, in terms of, the amount of assets that are on L1 and, some of the L2s and all that. And it's good to see the price action kind of reflect the fundamentals a little bit. It's been a long winding road, to get some positive price action for it. So yeah, no, those are my 2 cents anyway.
Yeah, we're gonna get into like ETH's outperformance, recent outperformance, or like this week's outperformance a bit later as well. So we're gonna dive a bit deeper into that as well. But before that, right, we're discussing like the state of the market. There's like one specific part of the market or like the market dynamics that I would like to zoom in on, especially since we have Rachel here, which is um, you know, VC funding. I think the space probably wouldn't be here, or at least not where it is, if it weren't for VC funding. Um, but at the same time, there's also this sort of anti VC sentiment going on in the space. So that it's this weird contrast. Yeah, that was just like curious about Rachel. Like, what are your thoughts on that?
Yeah, aware of like the anti-VC sentiment late going on lately, and there are like heavy discussion around our business model. Like, does it work, or like, is it uh, time to think about a shift in different funding? So I do want to stress that VCs are just degens with a bigger bag. Like like we're super degen, think about it. Like we ape into new projects without even a token. And the risk that VC bear is like super huge. Like I think like it's almost like investing in a meme coin at first. and we just like bet on the founders and only a pitch deck, and we don't know how it would look like after 3 months. Like, will they be still be there? Of course, like we have analysts and we have a lot of research to back our decision, but all in all, it's just like we are bearing a lot of risk, and but people would think like, we have earlier access, that therefore we're earning a lot of money and we're not sharing with the crowd. But like, I guess I think they don't see, what they don't see is like the laws that we make. And so I do feel a lot of people hyper focus on VCs and startup the relationship, but there could be a lot of different things happen around the funding process as well. So uh, I think VC does have their value. In order, like in terms of guiding startup founders and also providing them with the appropriate value to be successful. And also the industry is very nuanced in nature. No one really knows what, you know uh, 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 what's the next big thing that's coming. Like so we are actually the same. Aside, maybe we have more analysts to do researches. So it's more about the whole environment. I feel we win with all the degens and lose with them also. Like, so it's all we were also very susceptible with the macro environment. And there could be also like bootstrapping startups to be successful. I agree. And their VC funding should not be the only thing that founders think about when they look at funding options.
Right, that's an interesting point because okay, like first off, like very interesting take that yeah, high risk, high reward. But when you get high reward, everybody is up in arms because they just see like the successes, right? They don't see all the risks that you take, all the loss that you take. That's definitely like a very valid point. That's interesting. Um, so that's an interesting perspective. The other thing that you're touching on is like different funding models, right? VC is obviously the most well-known one in this space. It's almost sort of like the default. But lately, there's like popping up more and more this bootstrapping model that, of course, always been around, but successes like Hyperliquid have made it a lot more salient. So like people see it and see that hey, this is also a viable model. And in our talk before, in our talk right before the show, you actually highlighted that there are like actually other models beyond bootstrapping and VC funding as well. So maybe yeah, maybe it's cool if you can um, yeah highlight some of those different ways to do it
Mhm.
and your take on it.
Yeah, yeah. I was actually once a startup founder, so like I do know a bit of like different kind of funding options besides of VC. I think a lot of founders think of VC money are free money because like they don't have to respond. Yeah, yeah, they just like, if anything, close the company. So like, actually, I think if anyone watches Shark Tank, Mr. Wonderful has his own venture debt fund. That is one alternative to just raise equity raise, rather than equity. You have a debt with the fund capital, and to like return actually return the funding like after a period of time or under a circumstance. We can also look at like issuing debentures if the company is bigger and also have some kind of asset in their balance sheet. So that would make sense as well. As There is also a very up and coming model called revenue based financing. I see it been booming in Hong Kong, and so what they do is based on your revenue, yearly revenue, they can sort of make a loan without requiring you to dilute your equity, which is very good in my opinion for founders who want to retain more control of the company because like existing model of VC fundraising is like you go to different multiple series, pre-seed, seed, and then series A, B, C, D, and then until you like eventually IPO. And the process can dilute a lot of founders shareholding, and they only might hold 5% at the end of the day. So yeah, I think VC is not the only option, and people look at VC very like big because I think it might be easier to for them to exit without any consequences. But I do think companies comes in all different shapes and sizes, and every founder can consider different options as well.
Right, that is interesting. And I think you're already kind of like alluding to my next question, which is like, what are like some trends that you are seeing like in private markets, both on the investor side as well as with founders? One thing is this revenue-based funding model. Any other trends that you like want to point out or highlight?
Yeah, I think like in terms of investing trends, we at Foresight is very bullish about payment because payment is an obvious use case, and we as an industry is already processing at least 1 trillion payment per year, and we see that growing also with like a lot of TradFi company jumping on board, such as Visa and PayPal. So that is one thing that we are actively looking at. And before the start of the show, I did like looked at some report, and like Galaxy issued that Q1 of VC trend would be like DeFi and infrastructure get and payments leading the way. So I do feel like this sector can be the next big thing.
Yeah, I would agree. I mean, I think you're seeing that a lot in like the M&A world right now too, obviously with a lot of stablecoin infrastructure companies getting bought by larger players. I think Stripe, obviously notably like recently with their acquisition and kind of like their pivot into the stablecoin game. Um, yeah, no, I mean, I agree, and I think it's good to see from my perspective, and I don't know how you feel about this, Rachel, or what Foresight's kind of thought about this is, but it's good for me to see like more like specific infrastructure taking off versus like generalized infrastructure because I think like I don't know how you feel, but I feel like we're seeing so many L1s, right? So many L2s. It's like every day I see three, four, five more. So my question for you is like, how is Foresight thinking about like the infrastructure side? So these different chains that are popping up, and what's sticking out to you guys as maybe like differentiating factors that you guys are looking for when maybe deciding to cut a check for another L1 or L2 or more infrastructure.
Yeah, it's been quite a while that like infrastructure has been dominating the space. Like they're the biggest player, they raise the most funds, and they're doing a lot of events and building their ecosystem. And I do think the the future would look like there might be, like you said, specific chains, like a chain that cater to specific features such as reward assets. It's also like a big thing right now, and also like perhaps restaking, as well as liquid staking chains. So we do think like that might be the way to go, and to sort of like differentiate among themselves.
Yeah, it's a good point, and I think, yeah, I think that that's the I agree with your thesis. I think that's where we're headed. I think we're already seeing this, right? Like, I mean, take like Plume for example. I think Plume's coming to mainnet soon. More focused on RWAs. Converge obviously was just announced with Athena and BlackRock and Securitize kind of coming together to kind of create a competitor to Plume. So it'll be interesting to see those two duke it out actually over the next several months to years. Um, but then all the way to things like Mega ETH, right? Mega ETH is doing something I think very specific. Specific things that they want to dominate in. And I think it's that like hyperliquid, right? We could go on and on and on. Unichain, and I do think that we'll start to see that more so than like the generalized roll up or the generalized L1 that we've seen, maybe in the past. So it's a good point. Like, what about DeFi, Rachel? I'm a DeFi guy, so I want to know your thoughts on DeFi. Not, you know, I think I've heard a lot of people say this, and it's true. Like, there's been so much innovation the last like 3-4 years that you get to now and it's like slowed down a little bit. A lot of the good ideas obviously have been taken and people are iterating on those. And what are your guys' thoughts on DeFi investments? Like, we haven't seen, I don't think, like the amount of the pace of innovation, I guess, that we saw maybe the past like 3-4 years.
Yeah, I think we we are not super focused on DeFi, but I do see a lot of value in like some kind of fund if they would like to park the money. Because of the market slowing down lately, or it makes sense to do restaking and or liquid staking for them, and for DeFi side, we are more bullish on institutional DeFi, like coming into the DeFi world. And we actually just invested in an institutional focused DeFi project called August. And yeah, they're
August Digital.
hmm?
August Digital, is it the one?
Yeah, yeah,
I
yeah.
got you.
So we're more focused on institutional than other DeFi tools.
I think the interesting thing with DeFi is that, we had such a wave of DeFi innovation throughout the last cycle that it was the one of the core pillars of being in crypto last cycle. Knowing how to use a bridge. I mean, I remember in the early days there weren't even any bridges. You had to, Pepperidge Farm remembers. You had to move your money to a sex like Binance or something, and then withdraw it to the native chain you were trying to get to. And I think it's one of those where, DeFi has been like thrown in the dirt, kicked around, but I think there are some tenets of it which are easily overlooked in that in every mass market extinction event that we had, oracles worked, liquidations functioned, lending markets functioned. Okay, there were a few protocols, Terra Luna, whoever, that went completely bust. However, the resilience that we saw through these protocols, I think there really is some merit to that. And I think that when it comes to DeFi, it could well be one of those things where people will end up using it without even knowing they're using it. In the same way, however many people have a Revolut or a Monzo bank account where, they put their money into an investment pot or they're earning interest on it. I think the day will come where you simply in your bank account you have access to some form of stable coin denominated in your local currency. And if you're going to earn interest on that, is that going to be is that going to be through the bank who you're banking with? Or is it going to be the interest is coming from one of the largest lending protocols in the game? If you want to swap your local currency denominated stable coin into a dollar or a Hong Kong dollar or Arab whatever, is that going to be swapped through the banking infrastructure? Or is it going to use some form of exchange, decentralized exchange in the back end? I think by the time we use DeFi, it'll either be a point of necessity because times are so bad that we're forced to transact with one another along these rails. And it might take longer than people expect. Being early can often be the same thing as being wrong. And I know that sounds crazy to say, but when you're early to an idea and the consensus isn't there, isn't that pretty similar to being wrong because you've just come to a conclusion too early?
I think having a VC like Rachel on, I mean, obviously they deal with that all the time, right? Where they're so early that sometimes you have to like let it cook for a while. I wanted to actually get back to something Rachel said earlier about how VCs are like, the most degen. It's true. And I think that, one thing that like we we only see like these situations come up where it seems like there's something predatory going on, in terms of like using retail as exit liquidity, but like those are like few and far between, just like everything else in life. Like we only focus on these isolated instances. So like, whether it's like the whole Celestia drama or the Movement Labs drama, like these kinds of things, right? And I don't think we fully appreciate that like VCs are usually locked up for way longer than everybody else. I mean, think about some of the things that go on with with some of these DeFi projects that come out, right? Like you've got your seed round, you've got like your private investors, and then usually when the TGE comes around, if there's any kind of vesting on the airdrop, it's usually much less time than maybe the private round, and like the seed rounds are sitting there waiting, to get their tokens unlocked, right? And so yeah, I just wanted to say that because I really do think that like people hate on the VCs a lot, and sometimes it's because I mean sometimes the team just made a poor decision. They didn't think through all the way like the effects on everyone for certain decisions. And the VCs get a lot of heat for it, right? But I said this last week on the show. Um, but if there were no VCs, obviously there would be no crypto, right? Like there would be no markets in general. There'd be no entrepreneurs in general, right? And so, I personally think that VCs just get a little bit too much hate, when it comes to some of this stuff. And it's really like the teams and sometimes the advisors that need to kind of take that on the chin a little bit. That's my opinion.
Yeah, I agree with you, and also like I feel as an industry that is contributing, there might be also some bad actors in the space that created some drama, like you said, the cases, and there could be also like maybe one project or two that VCs decided to like, okay, maybe we do a short term kind of thing that created the situation. So, but like at Foresight, we prioritize in long term sustainable business model over short term gains, and also like we invest in the industry. The innovations more so than the financial means. So um, actually, there are quite a lot of projects that we invested. They haven't yet TGE, so we're really being patient and also like bearing a lot of risk. So therefore, we We are actually contributing to the space, not like taking from the degen, like a lot of people think.
Yeah, I think, and Rachel, I am cognizant that you need to jump in a second, so I'll transition to that. But yeah, I think what's partly playing there is that a lot of people have like such short term horizons in this space that they maybe don't really appreciate the the time frame that VCs are operating on, right? And I think a lot of that like kind of gets lost in like the heat of the moment when prices are going up and down and people lose their bags and stuff like that, and they're looking for scapegoats. Um, Rachel, again, I am aware you need to jump, so I think it'd be a good time to thank you for your time and for joining us. It was very interesting to get your perspective. Um, we'll continue the show, but Rachel, we'll let you go for now.
Thank you, guys. It's a pleasure talking to you, be on the show, and hopefully you have a nice rest of the show.
Thank you, appreciate that. We'll catch up later.
All right, bye.
All right, and then there were three. All right, for first time we have a guest jump off mid show. Uh, she had somewhere else to go, other meeting, but guys, we can just keep it going. Um,
Or is it a bit like one of those, it's not you, it's me?
what do you mean? Huh?
You know, it happens.
I don't know. Um, guys, what do we want to talk about? We can cover the ETH outperformance. We can cover macro. Um, oh,
I think
still
we should
we
touch on ETH Outperformance briefly because I
yeah.
think I think I deserve to take a victory lap as well. Uh,
Oh, we're
you know,
feeling a little
I'm
bit
pumped.
cocky,
I'm
huh?
blowing my own trumpet right now. You know, I stuck my neck on the line last week, giving ETH my winner of the week. I said to everyone, I'm putting it on the line. Crucify me next week if I'm wrong. And you know what? It was never from a point of technical or fundamentals, right? For me, it was purely as a point of being a contrarian. You know, it I've learned in crypto that as soon as things become incredibly consensus, often I think you're more towards the end of it as a trade, as a belief. We had it in 2021, right? It was consensus, just park your stables in Luna. Go ahead. It's 20%, easy money. With the meme coins in this most recent cycle, we had bozos streaming on Twitch, trading meme coins as if there actually was some edge to it. And then what did we see after that? The president launched his meme coin and it nuked the meme coin market. And there's elements of that for me that I could see within ETH where, any outperformance short it, we're going to nuke. And I think that there was a sense of that with what we're seeing in ETH now. But what's interesting is these flows weren't driven by ETFs. Most of these flows actually came from within the crypto sphere. So that begs to question, who the hell is bidding this?
That is a great question. Any contenders?
I've read a lot about Abraxas Capital. There's a lot of talk on CT at the moment that it's just a Alameda rehash. They're back to pump the shit out of the order books, and people drawing similarities between the second peak we had in the previous cycle, which some people attribute it to an Alameda driven pump. And Abraxas Capital, it's a UK based hedge fund. And some people genuinely think that it's the guys behind Alameda. I mean, it's a hard one because, obviously it can't, you could make the argument, well, it was so heavily shorted with all these delta neutral products out there now. Is that all it took to give it such a huge move? A few hundred milli, thrown at it, it's hard to say. But in the backdrop, we have the stablecoin legislation, RWAs are really pushing up. People like to hate on ETH. It's never had downtime, it's always functioned. It might be slow, and people like to complain about the Ethereum Foundation, things that have gone on there. But aside from those points, it might not be as fast and as sexy as Solana, but it was the first platform which brought smart contracts to the plebs. It was the first platform that gave DeFi for people to farm food tokens on. And I don't think you can always understate that, because there's a lot of capital sat on there earning interest. I think Aave has got 20 billion or something locked in the platform now. So, there are some poignant things that you should consider with ETH. It's just our mindset has been so used to how shit ETH has been over the last 2 years that everyone was conditioned from 2021 to ETH outperformance, ETH Bitcoin going to giga high levels until post the merge, and that down only to around 0.01 ETH Bitcoin valuation. It was
Yeah,
crushing for a lot of people. Big players
yeah, and
capitulated.
and
So it's a
and
tricky one.
shiny new object syndrome also like rampant in this space, right? Like, oh, this new chain and this new chain, and it's high performant and TPS out the wazoo. But at the end of the day, it's like the first mover is still steady doing its thing. It's like slow and steady wins the race sometimes. Um, but yeah, ETH outperformance obviously like I think a lot of people are happy to see ETH doing well, obviously.
Yeah, it's like there, for sure. It's also like a hate rally, man. There's so many people hating on ETH that like it's the hate rally now. Just like what happened with Solana. Like, so there's so many people hated Solana, and then he goes on this crazy rally, this crazy run. Hopefully, the same thing's going to happen for ETH, because I do think it's deserving. Like, and I try not to be a maximalist too much. I do, I already said it earlier. Like, I think ETH is well positioned and probably has like the biggest moat, in terms of value capture. Um, but damn, man, like, I mean, it's got to have its day in the sun sometime. And I think that's what we're seeing right now. I mean, it can only get so low to a certain point where, like, value investors are looking at it and they're like, this is just like so incredibly undervalued. You know what I mean? Like, I can't help but like pick up a bag right here, right? And it reached those levels. Like, it's reached those levels a few times. And eventually, it's got to go your way, right? And especially when it comes to like the funding rates that people are paying to short it. It's going to flip on its head eventually. It always happens. And you know obviously it's got all the fundamentals in the world. Uh but it's been interesting to see not only that, but like it's good for altcoins. Like, I don't think people talk about ETH a lot, but like the more that ETH gets punished, the more that a lot of the altcoins get punished as well, because there a lot of them are beta to ETH. So it's been good to see, like, some of these tokens that have strong ETH beta also bounce, right? So I think you saw like a big move up for EtherFi, and you saw a big move up for Athena, for some of these fundamental coins that like we all talk about and love. You're seeing a strong bounce for them as well. So it's definitely a net good thing, obviously, for the space. The more that happens, because that gives projects a little bit more of a breather, that we're getting pounded for months and months and months. So
100%. Yeah, huge relief. Let's transition a little bit to that other blue chip, BTC. Um, D, you did some interesting stuff, looking at data, throwing in some vibe coding, and you cooked up something. I think you
Yeah,
have something to share
absolutely.
with us, right?
Yeah, I'll give a little explanation before I start. So, I'm by no means a financial engineer. I'm not a quant. I'm just a guy, right? And it's amazing some of the insights that you can create simply by feeding in information to any chatbot, Grok, ChatGPT, Gemini. The list is endless. And so what I've done is I've done an analysis into the relationship between Bitcoin and the Nasdaq. People talk about correlation, and one of the things that I've taken a deep look into is the beta. So when we're looking at the beta, now let's see if I just need to figure out how to share my screen on this properly. We'll just put this here. Give me 1 second.
Yeah, sure. Take your time to figure it out. Maybe you need to allow the setting or something like that.
Here we go. So this is what we want to see. Can we see this? Excellent. Is that brilliant? So what we have here, okay? This, first of all, if we look in the top right corner, we can see the beta of 0.85. Now, essentially what this means is a 1% move in the Nasdaq typically is reciprocated by a 0.85% move in Bitcoin. And this uses, and now we see there's two statistical tests. The Pearson test, essentially. Now, in terms of explaining this to the average audience, what it does is it looks for essentially a straight line relationship. Think of it as if every time Bitcoin goes up, Nasdaq also goes up a little in a smooth, straight pattern. Pearson says, yep, they're friends. Generally, this is good for when you're looking at prices that move smoothly together, like synchronized dancers. So, what we're looking at now, right, is that over the 1 year period, having this Pearson correlation at 0.42, what it essentially suggests is a moderate linear relationship. Often, when the Nasdaq goes up, Bitcoin tends to go up as well. However, it's not a perfect relationship. They do move in a similar direction more than half of the time, but not perfectly. And it's also not a strong enough relationship to simply call Bitcoin a tech proxy. This is something that's really important to note because, for those of us out there who we wish for the decoupling, we wish for all these different things to come true, you've got to look at the data. You've got to look and see what it's telling you. And what it tells us is there are times where it doesn't move up with the Nasdaq. And I think that is a really important thing to consider. So the next one, I've got another chart to show. We'll get rid of this bad boy. And now we'll get a new one up. This one is looking at something called the rolling beta. Now, what the rolling beta is the rolling beta is essentially looking at how the beta has changed between Bitcoin and the Nasdaq over the last few years. So give me 1 second. Here we go. Can we see? Excellent. So what we see here, okay? This is looking at how the beta has changed since 2019 to 2025. This is measuring all trading days. So between 2018 and 2019, the beta fluctuated between 0 and 0.5. Occasionally it dipped negative, meaning that there were times where Bitcoin was completely uncorrelated, even weakly correlated with the Nasdaq. As we go into late 2019 to early 2020, we saw this negative data. So showing that Bitcoin at these times actually acted as a risk off market asset, which is very interesting for what we hear now. But the big change in this relationship is post 2020. This is where we saw this rapid shift to Bitcoin going into strong positive beta. Obviously, COVID time, large amount of money printing, rising tide lifts all ships. Post 2020, after COVID, we look to 2021 to 2022. It remained high and stable above 1. Bitcoin and the Nasdaq carried on to move strongly together. But the interesting thing about this chart now is as we go to 23 and 24, we really see this declining beta down to 0.25, even 0.25, zero point 0.3. This indicated a weaker correlation, either due to the market decoupling, which people denote now and go on and on about it now, or the broader shifts in the macro environment. A lot went on in 23 to 24. We had the Silicon Valley Bank collapse. A lot of stimulus came in through the bank term funding program. Some people might argue that this helped lift Bitcoin. Maybe the introduction and the talk of the ETFs during that time before they actually came in had something to say. Now we look finally where we are now, 2024 to 2025. We saw the beta rise again up towards 1 and then drop towards 0.8. What this suggests is an intermittent high correlation, possibly linked to market cycles or crypto specific events. Now, what I know what our viewers might be thinking, what the hell? How can this help me make money? I don't give a shit about any of this. Who is this guy trying to pretend like he's some quant from
Listen,
the Big
I was
Short?
just about to ask this question. Thank you. All right, go ahead. Go ahead.
Yeah,
Takeaways,
absolutely.
insights,
So,
actionables.
so I think the interesting thing that we can look for with this is that, in particularly, people like to talk about decoupling, and what truly decoupling means, right? Is that Bitcoin doesn't move lockstep with the Nasdaq. And I think where these sorts of things have value is it helps you paint a picture into being able to see just exactly how close we truly are to some sort of decoupling or not. You know, if the Nasdaq goes through a 10-20% drawdown, are we truly going to be protected against that by holding Bitcoin? And I think that, for the hope that we pray that this beta continues to go down, but then at that point we might be in a very different market environment. When we have days where, let's say, for example, Bitcoin is down and we see the traditional markets up, right? Generally, if anyone remembers the summer period before the election, the indices were ripping to all-time highs and Bitcoin was doing nothing, 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 nothing. So this is a period where, those of us who wanted it to be correlated, we were praying that this correlation would come and that it would eventually catch up. And it did once Trump won. So I think in layman's terms, how can this help someone make money? I don't think most people could use this to influence their trading systems in a significant way. However, it gives you a great insight into just how close this asset is in terms of its behavior against the Nasdaq. It's not a levered tech proxy completely, but we're not completely out of the woods in terms of decoupling from the Nasdaq just yet. And I think the value that most people can find is that using these statistical analyses, you really can get a snapshot into what truly the data is telling you, as opposed to just trusting what people write on the internet. This is numbers, this is mathematics telling us this. When you were at school and you didn't listen in your maths lessons, these are the moments you probably kind of wish that you did, because numbers don't lie. Numbers don't have an agenda. Numbers aren't there to sell subscriptions. Numbers aren't there to front run your bags. So, yeah, I'll
To
leave it
me,
there.
the most interesting takeaway here is kind of what you're alluding to at the end, right? Like how accessible or doable, feasible it has become to, start running your own analyses. Like when you say running analyses, it sounds like very, abracadabra to some people. But, and still, sure, you kind of like need to dig into it and understand what you're doing. But is it more accessible than ever? Is it more feasible than ever with the tools that we have now? Yes, like it's getting closer and closer. And yeah, this might change the decision point for a lot of people between like, hey, I have no clue. I don't have a shot at like figuring this out on my own. I'll just listen to some guru with like a paid Discord server and doing who show me like technical analysis and telling me what to buy. Or, hey, am I going to start like digging into this stuff myself and try to figure out some stuff and like learn as I go and bit by bit, learn more and figure it out and start making some decisions based on like your own insights. To me,
Yeah,
like that's the biggest takeaway from all of this
yeah,
more than
and
anything else.
I think it's interesting to make the case where you see how much the asset has changed. That's another part of what that chart, the story that it told, right? Early days, heavily uncorrelated. You know, there was bare. If the Nasdaq moved, Bitcoin did nothing. We've been in periods where the Nasdaq moves and Bitcoin's highly correlated. We're kind of like at this sort of point now where it's still closely correlated, but there's still a smidgen. There's still this glimmer that it's not. And the argument and the case you'd make is that as it matures as an asset, do we look to a future where the beta between the Nasdaq starts to go down, right? These are the things we can learn from these charts. If we slowly start to see this relationship become less and less and less, so let's say a 1% move in the Nasdaq equates to a 0.25%, a 0.4% move in Bitcoin. In my view, where you use this to make money is you can see at hand there's a structural shift at play, that things are changing. At the moment, I think we're on like we're sort of one way or another. And with vibe coding, you can really, really make many, many analysis like this. If you just know how to run a Jupyter notebook and you're creative with the prompts that you give these AIs, you can give yourself access to things that there are companies out there who charge thousands of dollars a month, people who are paid six-figure salaries yearly to give you probably better than what I make, but it gives a bit more power to the individual.
Yeah, it'll be interesting to see, like, and I don't know if you plan on doing this, but, like, if you start looking at that analyses, like, month over month and start, like, charting, like, what are some of these macro events that are happening along the way, right? And then you can try to see if, you can catch any trends there, right? Like, is it positive crypto legislation that's causing some of this in this month of time versus versus a macro event that's causing everything to go up at the same, like those little intricacies, I think is like taking that to the next level. Um, and you're absolutely right about the cost, right? So obviously, if you're listening to this, like, humble shill here, Alia Research is giving a lot of this to you for free, so thank you to D, thank you to Alia Research for their contributions to society.
And I'll
100%.
keep bringing more. You give
I
me
was
a
gonna say
10-minute
like
slot in this pod,
the intricacies that Kirk is basically calling for. Like I count on you to like basically have like a full report for us like next week and like show us what those intricacies are.
easy money,
No, no,
easy
no.
money,
Awesome.
brother. And actually, I've been working on a few other scripts too.
Mm,
I have another one that looks at the relationship between Bitcoin and gold, and people like to say, I don't know if you guys have ever heard the expression that when gold tends to top out, you see Bitcoin start to make its move.
mm.
There's a lot of big analysts online who've said things similar. And I ran an analysis where it looked at the relationship between Bitcoin and gold. And it's interesting, right? Where
Cliffhanger, cliffhanger. Yeah, I think you need to stop there and leave that
He's
for
gonna have to
next week,
yeah,
man.
come back.
I'll save it for
Listen,
next
listen.
week.
Only on market cap. Come back next week, and we'll have the next phase of the analyses. No, I think it's good to include this in the show. I think because it's hard to find. I think analysis like this, especially for free. If you want to go find something like this, you're gonna have to go pay for it. But no, definitely, I think we should look at that next week. It'd be interesting to see what the statistics are.
Let's do it. Vibe coding for the win.
Amen.
D for the
Hey,
win.
Amen.
Who
honestly,
else? Who else
It's
going for the
amazing
win,
what you can
guys?
do.
Winners and losers.
Ooh, good one. Good one. You hit me with it. Okay, so
Bam.
it's I'm debating on like who to even name as the loser in this situation. You know, I would say if I mean I was gonna say somebody else, but you know, Coinbase is the biggest loser today for sure. Um, yeah. I mean, I think I mean I doubt there'll be any like major effects to like their business because of it, unfortunately. Because I mean, I think people are just going to go plug their money in wherever they can, you know, gamble, right, and where they can get an edge. So they're going to continue to deposit their money into Coinbase, but like it's a big loss, I think, for Coinbase in terms of at least the way that I view them as a brand a little bit. Obviously, it can happen. You know, it can happen to a lot of people. It just to have I'm a Coinbase user, right? So to have my information potentially involved in like a hack like that is disappointing to see. So hopefully, they can figure out a way to mitigate it. Hopefully, they can figure out a way to discover who did it. But I definitely say Coinbase has got to be up there. And then the second one I would say, unfortunately, because I really like their team, but the this this derive situation. I can see why they're doing it because I obviously, the big Deribit acquisition by Coinbase, and I do think that like obviously like every founder, every core team, I think their goal is to eventually exit. Obviously, you want to exit and realize some of your profits from the sweat of your labor and all that. Um, but it just seems like such an inside thing, right? Where for people that don't know, Derive kind of like was a team that originated within synthetics itself. And now to see kind of like synthetics, proposing to buy Derive for kind of an outrageous price and an outrageous structure where like Derive holders would get locked synthetics tokens that essentially were kind of minted out of thin air for this opportunity. I don't know. It just smells too much like an inside type deal, right? And it might not be, So I don't think it's a good look, in terms of like the proposal for synthetics or for Derive, and I'm sure that they're going to restructure it, based on the feedback that the community is giving them. But um, yeah, that definitely caught my attention here in the last couple of days. So I had to throw that in there. Yeah, maybe. And again, too, like I know I've talked to the Derive team before, and they're good guys. They're good people. So I doubt that it's anything super malicious. I just think that I mean, you have to start the discourse somehow, right? If the goal is that you want to sell. Then you have the right to, obviously, and you've got to start somewhere. And only in crypto would this happen on obviously like a such a public forum. Um, but again, too, I think that the terms will likely improve, but on a personal level, I just don't want to see them, get acquired because sometimes you don't know what happens to the product after that. And I think Derive actually, if you've ever used it, like they've actually built a really really good UX, and I really enjoyed actually using Derive for options trading and derivatives and stuff like that. So it's on a personal level, it hurts me. So that's probably why I'm so bit by it.
Yeah, it's weird, right? Because I actually used Derive myself a few, like 2 weeks ago. I bought some options on there. And it's a weird one because after Coinbase acquired Deribit, there was sort of two mindsets you could look at Derive with, where, are they poised now to, make a really big sort of impact in the space after such a huge acquisition of Deribit by Coinbase? Or the other side of it was, well, are they kind of sort of dead in the water now because Coinbase have Deribit? Can they simply just roll out this option functionality through Base if people on DeFi want to use the system that Deribit offers? So it is a weird one. It is a it's almost like a football team. Sorry, for the American audience, the soccer team, football team. They go in and they buy a load of players from another team, and then it's like they've gone from a better team to a worse team in a way, or a team where they were really pushing to sort of move up the league, and then all of a sudden all the players have gone to like a previously large team that aren't as big anymore and sort of struggling. I mean, if anyone follows the Premier League football, you just look at Manchester United and Tottenham. Like, they came like near bottom of the league this year. So that's a little football soccer analogy for people. But I'll segue into my winner of the week. I'd say I gotta say Ethereum. You know, I mean, it's boring. It's vanilla to say. I said, I'm not going to toot my trumpet because I could easily be wrong. I could easily be massively wrong, and we might do a huge nuke. And the warning signs were there, and I've got egg all over my face. But you can't hate on an asset too long. I've learned in crypto. From the 2020 cycle, even when one meme coin came out. I mean, people hated on Doge. When Doge did its huge run in 2019 to 2021, the hate on Doge was biblical. Shiba, the hate on Shiba was biblical. Both did ridiculous runs, right? We see a similar. I'm not comparing Ethereum to Doge or Shiba, but I'm comparing the sentiment, right? I remember the sentiment, and so much hate, so much despise towards this thing when, even if you were like a huge believer in Solana or Hyperliquid or BNB, half of the infrastructure they're built on is probably because of smart contract development, which stemmed from Ethereum. Do you know what I mean? Like, it's like hating on farmers because you don't like eating vegetables. It's like the simplest way of putting it. So that's what I'll say. And then loser of the week, I think I'm gonna have to join with Kirk. I think it's synthetic slash derive. Stablecoin depegged, buy derive, give them a load of locked tokens to the users. I mean, what if they didn't even want to hold those tokens? You're forcing these tokens on people who didn't even want them. At least give people the option to have cold hard stable coins at a minimum, you know, rather as opposed to locked tokens, which by the time they unlock and you can actually dump them or do whatever you want to do with them, they might be worth like half the value that they are worth now. It's not like you've participated in like a high level seed round or an echo round where everyone eats and everyone's printed, the app's amazing. You've had tokens forced upon you. No, and I think that the core ethos of crypto, I don't think it is that people should be forced to have these tokens that they don't want to. And it's not even the case that it's free money because you can't even sell it.
Yeah, I mean, that's the thing I think that bothered me the most about it was just that you're kind of forcing I mean, we say force. Obviously, it's a proposal. It's got to pass. Like it hasn't passed yet, but like it's tough to take like maybe you have liquid derive in your wallet and now all of a sudden it's getting replaced by lock synthetics tokens. You're locked up for, so you were liquid and now you're locked up. But usually when things happen like this, when there's an acquisition, right, it's usually a very positive thing, depending on the valuation. Obviously, it's supposed to be a positive thing for a lot of the shareholders or a lot of the token holders, and it kind of flips it on its head a little bit, where it's no longer a positive thing. It's kind of like, and it kind of creates that uncertainty. Yeah, so I mean, and again, too, I think I'd feel a little bit differently maybe about it if like there wasn't such a close correlation between the synthetics and the derived team, historically. Obviously, they're separate teams now, but a lot of those ties obviously, still exist. And I feel like I'm being pessimistic because I didn't even give a winner of the week, But the winner of the week, I think, in my perspective, is going to be EtherFi. I think EtherFi in what they released, obviously with their cash products, kind of getting their debit card, out into the wild, was a big win for them. I think it's going to be a big win for the industry. Just talked with their founder a couple of days, well, sorry, last week, and we just released the podcast I think yesterday. For those of you that want to take a look at it. But anyway, in terms of, one of the things that Mike got into when we talked was the effects that it might have on like crypto native businesses, that have a lot of their treasury token on chain, but they can't really do anything with it, right? And that's a big problem that's plagued crypto. Is a lot of these projects have so much, you know, so much of their token in their treasury, and there's no really good way to deploy it. You can't deploy it to a liquidity pool and earn yield because people destroy you, because you're diluting the liquidity pool, right? You can't sell it because people will destroy you and claim that you're, a scammer. And so there's not really a whole lot of good things to do with it. Even borrowing against it, which was kind of what you would do in the EtherFi sample. That's probably the best thing that you can do. But then you have situations like what's going on with with the Curve founder and his loans and like some of these things, right? But these businesses need to access that capital in order to keep functioning, right? They've got to get some kind of a way to do it in a healthy manner, right? And I think that's what EtherFi is going to unlock a little bit with this cash product. So I thought it was a big win for them, big win for the industry actually. And hats off to EtherFi. I think they're building fantastic products over there.
Awesome. Yeah. Saw that come online. Go check it out. I'd say should be a good one. Um,
Can
all
we
right,
stick it on
guys.
you, Stefano?
What do you mean? No, 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 definitely not. Not this week. Not this week. We're up on time anyway, so I gotta close it out, guys. I'm sorry. Next, maybe next one. But yeah, interesting episode. Was very cool to have Rachel on. Some insights into how VCs, how they look at the market right now and their whole perspective on how the market is feeling about them, sort of like their counter sentiment, was interesting to get that take. Um, yeah, guys. So thank you to Rachel. She's not here, but thanks Rachel anyway, guys. Thank you as well. D, thank you for that data dive. That was very informative, very interesting.
Pleasure.
Bit of a twist. Let's do it again next week. Um, Thank you to the audience for tuning in. We'll be back next week. Obviously, this episode will be posted on YouTube as well, right before the weekend, if we're lucky. If not, on the weekend. If you want to be notified of the next episode, turn your notifications on. And next week we'll have on, I'm not sure yet. We were supposed to have on Joe from Maple, but that's rescheduled. So we'll need to find someone else. So if you want to come on the show, DM. No, that's a joke. We'll find a cool guest for next week. Guys, thank you and see you on the next market cap.
All right, take care, everybody.
Cheers, everyone.